Hello guys, welcome to another episode of Daramola Talk Finance. And in the episode of today's video, we want to be talking about the power of compounding. Now, I have been hearing about compounding, but I was listening to somebody today. It's called Alexander Green. You should get his book on investments, the Gone Fishing Portfolio. And I just decided to watch a video on YouTube. And somebody said that they've been able to deceive us in school that we don't even know how to calculate compound interest. And that's stuck in my brain, compound interest. I know we've talked about compound interest in primary school or secondary school, but a lot of us didn't see it from the perspective of finance, wealth building, or wealth creation. Most is just normal arithmetic, 1 plus 1, 2 plus 2, compound interest. They didn't give us a motivation of seeing how we can actually build self-sustainability or financial wealth with this formula called compound interest. As a matter of fact, even the professors and the teachers teaching this stuff don't even know about it. That's how bad it is. So I picked a pen and I picked my notepad and I got the formula and I was calculating. And this is it, guys. If you have 35 years before retirement, if you're saving £250 every month with an 8% interest rate, let's say you're investing that money in the S&P 500. And by the way, we've talked about index investing on this channel. So do well to watch the previous videos so you can be abreast with the fact on what investment is and the different types of index you can actually invest in. So if you're investing that money in the S&P 500 that generates at least over 10% return on investment in the past 10 years, and now it's 10%, but I'm talking about 8% now, so I'm reducing it to 8%. For 35 years, that means you're saving every month, which is 12 months times 35 years, whatever that figure is. Let's say 540. I think that's 540. So if you're saving £250 every month on the 8% return on investment yearly for 35 years, that money generates you over £500,000. Crazy, right? Now, let's say you open a cash ISA for your child, and that money is also compounding. So you gave birth to a child this year, and you're investing, let's say £50 or £20, but you're increasing the money over time, and that child gets to 40 years or that child gets to 35 years. Guess what that will be on compounding? So I just talked about you have 35 years to retire and you started now. In 35 years, that's the value of what you're going to get, over £500,000. That's crazy, but that's the power of compounding. So you should look into investing your money. You don't necessarily need to know how to invest in the stock market. I mean, buy individual shares, because you might say, I don't know how to analyze, I don't know how to read stock, I don't know how this stuff works. But we have index investment. Watch this channel. I've talked about index investment in this channel. So instead of you putting your money in the savings account that, generates you nothing, you can actually invest your money in the capital market, which is the index, S&P 500, tracker funds, and all of that. You can get a broker that has those platforms available for you. Examples of broker, we have Vanguard, we have Trading 212. You can get those platforms, you can get those tracker funds there. I don't want to mention tracker funds now because I'm not segregating to put my own idea on you. So you should do your findings. But I do the Vanguard S&P 500. I do FTSE All World Index. I also do the small cap fund. I'm just giving you what I invest in, right? So you look at the returns on investment over the past 10 years, over the past 5 years, and see what it has been returning. You'll find that in Vanguard. So when you go to Trading 212, you see Vanguard FTSE All World Index. You see it there. And underneath, you see the financial performance there. You click on that document that you can download. You see the tracker funds. You see the performance, how it has been performing maybe in the past 5 years, in the past 10 years. So you have an idea of an expectation of how that fund is going to perform in the next year. Of course, they say that it's not a guarantee in the future, but you can actually predict what investment can be looking at its performance in the past. You get the point. Investment is risky, that's true, but there are some level of clues that you can actually get from the past to predict the future. You get the point. So that's why I'm saying that you can start investing in the index funds, and that money is compounding over time. And that's the power of compound interest. That little 250,000, you'll be surprised what it can generate you in 35 years' time. And you're going to retire maybe as a multi-millionaire or a millionaire, or at least $500,000. That's a good life for you. Yeah? Choice. I hope I've been able to convince you that there's power in compound interest, and you should look into that. First of all, go and get the formula of compound interest and do your own calculation, because your desire may be high. You may want to retire 5 million, maybe you want to retire 200,000, whatever yours may be. So go calculate it. There are online platforms where you can actually put in those figures there. So you see what works for you and start from it. Run with it, guys. Run with it. Until next time, please like, share, and subscribe on this channel. And I'll see you again. Remain green. Cheers. Bye for now.